Welcome back to another video of ithought PMS's fact sheet for the month of February 2026. As we close February 2026, global markets continue to remain sensitive to geopolitical developments, including the ongoing war and broader macro uncertainties that have kept investor sentiment cautious. In such an environment, volatility across asset classes has remained elevated. At ithought, our focus continues to remain on disciplined investing, strong balance sheets, and businesses with sustainable growth potential. Across our strategies, the objective remains consistent: to build portfolios that can navigate short-term uncertainty while delivering strong long-term wealth creation. Let us now take a look at how our products did for the month of February. Starting with Solitaire, our Flexi Cap strategy, which focuses on investing in well-managed companies with proven business models and strong balance sheets at reasonable valuations. The portfolio generally aims to deliver stable and consistent long-term returns through a relatively concentrated set of high-quality businesses. As of February 2026, the strategy manages an AUM of over 1,600 crores with a relatively low portfolio beta of 0.76, reflecting our emphasis on risk management. For this month, Solitaire delivered a return of 0.86% compared to 0.45% of the S&P BSE 500 TRI benchmark. Over a one-year period, the strategy generated 15.46%. However, over the longer term, the strategy continues to demonstrate strong outperformance with 21.44% CAGR over 3 years, 21.68% over 5, and 20.46% since inception, all ahead of the benchmark returns. The portfolio continues to maintain meaningful exposure to sectors like FMCG, financial services, capital goods, automobiles, and healthcare, with a strong bias towards debt-free companies and market leaders in niche segments. So if you would like to invest in our flagship Flexi Cap product, get in touch with us today. Moving on to TruBlu, our large cap strategy, which focuses exclusively on the Nifty 50 universe. The idea behind this portfolio is to own high-quality large cap businesses while eliminating structural risks and potential wealth destroyers within the index, thereby creating a more stable and lower volatility large cap exposure fund. Manages an AUM of 89 crores with a portfolio beta of 0.78. For the month, while there has been short-term underperformance, over a one-year period, the portfolio returned 11.76%, and since inception, the strategy has generated 11.14%, broadly in line with the benchmark while maintaining a lower volatility profile. The portfolio remains diversified across sectors such as financial services, automobiles, FMCG, energy, healthcare, and telecom. If you would like a new take on the Nifty 50, drop us a message and we will reach out to you. Next is Vriddhi, our small and micro cap strategy. This product mainly focuses on identifying emerging leaders in the mid, small, and micro cap segments using a private equity style research approach. The strategy focuses on businesses with market leadership characteristics, strong cash flows, low or no debt, and high governance standards. The portfolio manages 358 crores in AUM as on Feb 2026, with a significant share of the portfolio invested in companies that have little or no external research coverage, giving us the opportunity to discover under-researched businesses early. For the month of Feb, Vriddhi delivered 2.12% outperform in the S&P BSE 500 TRI, which returned 0.45%. Over the last 3 months, the strategy returned minus 2.52% compared to minus 3.13% for the benchmark, while over 6 months, returns stood at minus 11.23 versus 3.24% for the benchmark, reflecting the broader correction seen in the small cap space. Over a one-year period, the portfolio returned 9.14% versus 17.3% for the benchmark. And since inception, however, the strategy has generated 18.23%, demonstrating strong long-term compounding potential. Sector exposures currently include agrochemicals, chemicals, real estate, infrastructure, capital goods, and pharmaceuticals, with a clear focus on businesses with strong return metrics and leadership in niche markets. If under-researched niche businesses appeal to you, Vriddhi might just be the product for you. Reach out to us today. Moving on to Sphere, our dynamic multi-asset strategy, which takes a top-down macro approach to investing and allocates across asset classes such as equities, debt, precious metals, and global assets, depending on where the opportunity lies. The strategy is designed to create a balanced portfolio that can benefit from different market cycles while managing risk through diversification. As of Feb 2026, the strategy manages an AUM of 920 crores. For the month, Sphere delivered a return of 0.97% compared to 0.58%, for the NSE Multi-Asset Index 1 benchmark. Over a one-year period, the portfolio generated a strong 36.86% versus 14.56% of the benchmark. Over 3 years, the strategy delivered 13.65% CAGR. The portfolio currently maintains diversified exposures across banks, financial services, consumption, precious metals and global assets, with equity continuing to be the dominant allocation. So if you would like a 360-degree approach to your portfolio, get in touch with us today. Finally, NEO, our NRI-focused multi-asset strategy, follows a similar macro-driven framework while being tailored specifically for international investors looking for diversified exposure to Indian assets. The strategy invests across equities, debt, precious metals and other opportunistic allocations depending on the macro conditions. With the strategy managing over 100 crores in AUM, NEO delivered 0.57%, largely in line with the NSE Multi-Asset Index 1 benchmark return of 0.58%. Over the last 3 months, the portfolio delivered 1.54%, and over 6 months, 8.68%, and over a one-year period, the strategy generated 26.03%. Since inception, the portfolio has delivered a whopping 23.57%. The portfolio currently maintains exposure across banks, consumption, financial services, automobiles, metals, and precious metals, reflecting a balanced multi-asset structure. So if you are an NRI exploring and wondering which would be the right product for you, NEO is just that. So get in touch with us right away. Overall, while global uncertainty and geopolitical developments may continue to create short-term volatility in markets, our investment philosophy remains unchanged. Across all strategies, we continue to focus on high-quality businesses, disciplined asset allocation, and strong risk management with the goal of delivering consistent long-term wealth creation for our investors. Stay tuned as we come to you with our March edition of the fact sheet next month.